All right, everybody, welcome to another Tuesday interview. For over 15 years, I've been interviewing both top producers, authors, leaders, with the goal of putting on the best sales meeting in the mortgage industry. For the entire month of August and the entire month of September now, every Tuesday is dedicated to what I call MortgageCoach 10X training. You know, we have this thesis that the most successful loan officers aren't loan officers. They're playing an entirely different game. They are advisors. They are mortgage coaches, and we're doing training. You know, we're talking about strategies and tactics, very tactical in today's market. I've asked Renee Rodriguez to join me today to interview Sean, because I've already interviewed Sean a few times on this, and I thought it would just be great to have Renee's amplified perspective. What's up, brother?
How are you guys? Good to be here. Always good to see
be
Sean.
here.
I just got nervous. I just got real nervous.
Yeah, no, you've got two coaches coming at you, buddy.
Uh-oh.
Don't mess it up, Sean. Don't mess it up.
Don't mess it up. All right. So how do I introduce Sean? I've interviewed Sean so many times lately because he is just a poster child of what I consider a modern mortgage advisor. He's killing it on social media. His extreme authenticity is just obvious to anyone that follows him on social media, anyone that connects with him. And then he delivers advice. You know, every time he delivers price, he truly delivers advice to consumers in a way that's extremely personal, in a way that's extremely local. And Sean Herrero, welcome, brother.
Thank you, guys. I appreciate it. I love being here.
Yeah, and then, you know, I'm all about being a data-driven mortgage advisor. You're doing some pretty good numbers over there. How is your production right now?
I got lucky. I just got an email this morning that said I'm at just under 9 million for the month. What was it? I think I'm number 5 in the company as of today. So it's going well.
Yeah.
Sometimes don't like seeing that stuff, because then it gives me like a gauge, and I don't like to know where everyone else is at, because I don't want to feel like, oh, it's okay if I'm here because everyone else is here. I just set bigger goals. So it's kind of like a blessing and a curse to see that, but yeah, it makes me feel a little good today.
So just to give some perspective for everybody, you know, Sean works for Cross Country Mortgage, and there's over 2,000 loan officers. So being number 5 at a company like Cross Country is a massive accomplishment. It just goes to testament that when you are using social media right, when you are showing up on stage, both one-to-many and a one-to-one, you can kill it in this market. Renee, anything you want to say to frame the call before we just start asking Sean questions?
Well, I think I agree with everything you said about Sean. I mean, it's not an accident that he's producing more. It's not an accident that he's having a great month. And it is about utilization of time and energy. And Sean is utilizing his time and energy to create value and to get in front of more people, where unfortunately too many people are utilizing their energy on complaining and being scared of the market and not acting. That becomes a self-fulfilling prophecy. And it requires a massive amount of self-awareness and ownership to be able to do what Sean is doing. So I'm excited to hear more about this.
All right. So I'm going to frame the call a little bit, because one, this is part of our Tedx strategy. If you go to the Mortgage Coach website, it's mortgagecoach.com/TEDx. And it's all about, like, how do you get one more loan this month, and in a way that you can 10x, you can scale it, get one extra loan every month, one more qualified realtor this month in a way that you can scale it, and reduce price exceptions. And so Sean's call will be right here later on today, within a day or two. And all these other interviews, they were all part of this 10X strategy. So I just want to make sure you guys know it's here. There's a playlist. So if you click on it, there's not only all the long form content, there's also, you know, these 3-minute, 2-minute, just lessons on what to do. Now, I do want to, before we get into the training, there's an important thing I want to make sure every loan officer that tunes into 10X training gets. And I did an interview last week I called Moneyball Mortgage. And I interviewed Jim Deutsch. And this guy has an accounting background. He has built and sold multiple mortgage companies. And today he's a consultant advisor to over 120 companies. He's an author of a book called Strategically Transforming the Mortgage Industry. And I want you guys to get this, because it's an important an important lesson around business for loan officers. So this is an anonymized, you guys confirm you can see my screen, by the way?
Yeah, we
Mhm.
can see it.
Yeah, this is anonymized. And what Jim does when he goes into a mortgage company is he puts loan officers into 3 tiers. Top tier, which are the most profitable. And the top tier you can see are making the company about $2,447. There's a middle tier, and usually Jim says that they're either making a couple hundred or losing a couple hundred per loan. And then there's the bottom tier. And guys, this is the tier that is putting companies out of business and eating up all the profits. By the way, if you're a loan officer, you don't want to be in the bottom tier. Now, this is not production. This is based off of your contribution and profits to an organization. When I asked Jim, what is the number one differentiator between top tier and bottom tier? It's price concessions. And so you go around the industry, and I work with over 200 different lenders, and price exceptions are up like 50%, anywhere from 2x to 3x. And that is the differentiator, the primary differentiator between the most profitable, most successful. But here's another thing, guys. Price concessions, I think, are like your sales score. Like if you're delivering a high value Sean Herrero mortgage coach experience, not only are you going to have less price exceptions, you're going to have higher conversion. And the 2 things I want to push everyone is know your numbers. You can't manage what you can't measure. Find out what tier you're in. Go back to your company, and you don't want to be in the bottom tier. You want to be in the top tier, and you should know how your price concessions compare to your peers at your companies. Another little bit of Moneyball Mortgage. I've showed this to multiple top producers, and they're just like blown away by this. That when you look at all the cost from started credit report, 50% of the loans, no RESPA app, RESPA app. So there's 50% of your loans as a loan officer, 50% of loans get lost. But then this number blew me away, withdrawn. And this is just a reminder to every loan officer that when you lock a rate, it matters, and it costs your company a fortune when you lock a loan and you either lose that loan because it went with someone else, or you withdraw it. Withdrawn loans are just completely costing companies fortune. And again, a differentiator between the top tier and the bottom tier. A couple more little key points, and then we'll get into Sean's interview. Is there's a funnel, I call it, your funnel, and then there's above the funnel. And here's the deal. Lenders are losing a fortune above the funnel. That's your database. So you're getting all your loans out of your database. And then lenders and loan officers are losing 50% from credit report to app. They're losing a fortune on withdrawn, and they're losing a fortune on concessions. So I'm going to net this out, and then we're going to bring Sean on stage. I want every mortgage professional and every manager listening to this to flip the script. Right now, the scoreboard that every loan officer gets is how many loans they closed and what their volume was. By the way, Sean, was that your scoreboard? Loans closed, volume?
Volume, yeah.
What if we flipped the script and you also saw what was your conversion from credit report to closed loan, how you compared to your peers, and conversion above the funnel, turning your database into closed loans, and how you ranked from a price concession standpoint? Would you dig that if you had all 3 of those Moneyball Mortgage numbers?
Yeah, for sure.
Renee, anything you want to say about this before we get into the, exactly how Sean is winning in this market?
This is what I've been preaching for 20 years. The whole white paper we did on 10,000 dials was around leading indicators. And the worst thing you can do to somebody is measure them on lagging indicators. It's like going into the doctor's office and saying, but Sean, your blood pressure is high, lower it. And they're not going to be surprised because they already know it's high, and they don't know how because they came to you for that. But, if you give them a process to say, okay, breathe in for 3 seconds and out for 4, and they do that, and all of a sudden 10 minutes later, blood pressure is lower. That's the leading indicator. Those are the above the funnel metrics that sales performance management, not CRM, sales performance management should be managing, are the things that you can control that convert into activities. Those are the true leading indicators of what's happening. So I'm 100% behind this. And this is the way it should always be. This is what any sales activity, true sales professional is measuring, that they go, here are the things that I can control right now, no matter where I'm at in the funnel, no matter where I'm at in anything, I can go out there and I can breathe. And breathing translates into this. I can go out there and make talk tos, make phone calls, and the conversion of credit report to closed loan is critical. But even before then, how about dial to talk to application, or talk to credit report? And so you know how many times, because that's where your time is spent, is picking up the phone and dialing it. The other ones are still results. Even I would venture to say that credit reports are even lagging in that sense. Go further up the funnel and get into how many times you pick up the phone and do that, how many conversations you have, and what does that convert to? And you should understand who's doing what, because I love the thing you said, Dave, was the most powerful, was the waste of money involved in deploying resources to a locked loan that didn't close. People forget that having bad realtor relationships can be expensive, because you go through and you're measuring the amount of leads they give you. If that's what you're measuring from a realtor as an indicator, it's bad, because a lead triggers your dopamine. Dopamine is anticipated reward. So you're going to associate a ton of value to somebody who gives you a bunch of leads. But if you don't measure conversion ratio, you're not measuring the actual value. So I have people that get 15, 30 leads from a realtor that convert 0. Well, 15 or 30 deployments of resources, of people, time, and energy to follow up and close those leads is pulling on the resources of the company, which costs money. And if you don't know the conversion ratio, you're not running a business. So I'm 100% on board with everything you're saying.
Love it. All right, guys. So the North Star is conversion. Like, as a loan officer, that's the quickest way to give yourself a raise. And I always say, it's all about prospecting and mortgage coaching. Like, if you are doing those two things, you're going to win. So Sean, let's flip the script. We talked, and I wanted to get that Moneyball message out. What are you doing to win in this market right now? And what are you doing to help drive, personal, efficiency and effectiveness and conversion?
Everything we just talked about, it got me fired up, because that is, I think I've really fine-tuned that this year of what matters. So my process works really well. It doesn't work for everyone, but it works for the people that will like how I work. And by sticking to that, it's just become a better experience. And I think my conversion is dramatically higher as a result of that. And so I also, like Renee just said, I had a team of agents, top producers. They sent me a ton of leads last year, and I met with the team leader, who's a good buddy of mine. I was just like, I don't think we sync, I just don't think I'm the right lender for you. And I think that because your clients aren't choosing me. So yeah. I'm not going to change for your clients. This process works really, really well for a lot of people, but for whatever reason, I'm not the right lender for your team. And it's an empowering conversation. It's scary, right? It's very scary to do that. But if you have confidence in your process and you know that it works really well for people, you got to just stick to that gut feeling, I think. And that's what I really embraced this year.
Well, I think there's two pieces. One, I commend you for taking the ownership of saying that they're not choosing me, which I think speaks to your integrity, Sean. I think the other side of it too is you can have that same conversation and say, hey, we call it slowing down for yellow lights. Instead of speeding through a yellow light in a relationship, you got to slow down and see if this is red or green. Because the expensiveness is not in the fact of going red, is that it might take you 10 months to realize you're not getting good leads versus in one conversation like what you're having. But to go up to them and say, hey, you've sent me 10 leads, of which none of them have closed. We've deployed assets and resources and time and energy to go after all these leads. I've got one question for you. Are we getting your best leads? And I would have that real conversation. The underlying premise of that is, let's get real or let's not play. And let's get real in our relationship, or let's not waste our time. I don't want to waste yours. You don't want to waste mine. It's all good, because ultimately the customer loses. But, you might get an answer of saying, well, my brother's in the business and, he gets first dibs. Well, that's good information to know at the beginning of the relationship based on how much time and energy I'm going to be putting out there. So I love that you're having that. I love that, I'd say I'd see two approaches. One is taking ownership, which means it's only going to make your process better. But then two, also assessing and being courageous enough to ask that maybe you're not getting the best leads.
Yeah, and I think at that time, it's a market that I just am not the best to serve in that market right now. It's just, right. That's okay. That can change in the future. That's another thing I've seen, and I think this is on topic, but I've talked to a few people this year that are jumping from company to company, chasing jumbo pricing. And they think,
Yeah.
I got to have jumbo. That's my market. That's my market. The only reason that's your market is because you've said that that's all the only people you serve. Where I go, okay, I'm not fitting a certain market right now. I can still serve all these other people. I don't need to leave company after company. I just have to shift to serve the people I can serve at that moment.
Love it. I love that. And I love that you're looking at it from the perspective of leading the transaction and being the professional instead of letting them lead the process and saying, you know, this is how we do the business. And it clearly it's working fine for you. If you're doing $9 million worth of business in 1 month, that's working really well. And I think that's the paradox of what people don't understand when you get into a focused niche. And, you know, there's Michael Porter is one of the top 50 most brilliant minds in business. He's a Harvard professor. He invented the term competitive advantage. He wrote a book, really thick book, another book he wrote called Competitive Strategy back in the 70s. And he said there's only 3 ways you can compete in a marketplace. And the first one is to be the lowest cost provider. And you just said, that's not the game I'm playing. And like, I'm not going to be doing, and that's what even Dave's research said. If you're starting to be lowest cost provider, that's what's killing the organizations, because you're giving away profit and your ability to get any support in the future. Second would be a focused niche. Like, I only do jumbo loans, I only do VA loans, or I only do first-time home buyers, or whatever it is. But the third is differentiation. And everybody claims the third, differentiation, but very few live it. And the reason why I'm thinking this is because you just said it. People say differentiation is standing out. Well, okay, so then you could wear a clown suit and you definitely stand out, but that doesn't make you better or other choice. So the real definition of differentiation is the ability to sell your product or service without having to lower its price. You are so different. The process is so unique. The relationship is so strong that it's not comparable to anything else out there. Therefore, I'm not playing a price game, because it truly is apples and oranges. Why would I compare my price of Sean versus the comparison of something else out there that's much cheaper? It's just 2 different worlds.
Yeah, no, just for context, because what I do with these is I always remember how I felt when I would hear people talk about their business. If I wasn't in a place of having good business, I found reasons why they're doing better than I am, or why I can't do what they're saying. And those reasons are just excuses. Anytime we have a reason for why we aren't where we want to be, frame that as an excuse instead of a reason, and your mind will shift on it. But for context, a friend of mine worked at Wells Fargo, and they were, you know, they only wanted jumbo loans. They kind of pushed everything else out. So they're sitting in the 5s when I'm in the 6s. In good conscience, I can't put somebody into that loan. I'm not going to sell somebody a rate that's 1% higher. I'd rather refer my friend, and then he's referring me conventional. So it doesn't mean, you know, for this one specific market, I wasn't the jumbo lender at that time, right? It doesn't mean I won't come back to that. I just look at what's going on, and it's like, okay, odds are I'm going to lose this loan anyways. I'd rather lose it faster to avoid running credit report, all the costs that come along with it. So if I'm going to lose, I want to lose quickly, and I want to lose to somebody I trust.
I love that you said that. That is, I hope everybody heard that, because it's not losing it that costs money. It's the slow no that costs money. And if you know that something just isn't a fit and something just is not going to work, and you don't have the courage to face it, you're going to sit there and hope and have coffee meetings and run credit reports and get staff doing things that only in the end is going to find out being a red light anyways. But if you have the courage to face it and say, look, I don't want to slow no, let's just accelerate the inevitable, and let's deal with the truth. Let's get real, or let's not play. And Sean's getting real right away, saying, this is how we do business. This is how you do business. It's either a fit or it's not. And that's okay if it's not. And if you have the courage to be able to move past that, you will find so much more other business. Bravo, my friend. I love that.
Appreciate that. Thank you.
Love. So all the takeaways so far, guys. And if you're getting value, give us a reaction, whatever comes to mind. We love engagement. Also, remember, if you have questions for Sean, put those in chat and we'll get those to you. And looks like you're crushing it, Sean. You know, just more and more people are filling into the room. No one's leaving and people are engaged. So give us like a real world story or strategy, something almost like game film. Like if we were to, hear what you're doing so that you're winning, and then Renee and I will kind of unpack that and try to give you guys some ideas on how you can, emulate what Sean's doing. So share something.
Yeah, so it's a lot of it's what right when we jumped off, what Renee was alluding to, of looking at your data even before you get a lead. I would get so my business is completely realtor referral based. Those are the types of buyers that seem to resonate most with me. I've tried to do realtor.com leads, internet, like I've tried to do all the online, I call them button clickers, right? I think it's a different personality type that clicks a button to get a mortgage online versus someone who goes to someone they know, like, and trust to get referred. And I'm the person that resonates more with the people that are referred by their friends, family, past client, realtor. Those are the people that end up choosing me. So if I know that, I don't have to spend money online anymore, right? So I'm saving my own costs up front, but I had to test it to find out. Then I look at how I get referred and the conversion rate from there. If I get a text referral, it's dramatically lower that the buyer gets engaged. Where when the realtor does an email intro, it's dramatically higher. They just jump into my calendar, I'd say 90+% of the time. So what does that mean? It doesn't mean that if a realtor is going to text, they should text. I tell them their conversion rate. The sooner their buyer gets engaged with me, the sooner they will be in contract. And that's another metric I started measuring is how long does it take to get from a lead, right, a referral, to in contract? And that's what I've been measuring. And I just started this about a month ago, and it's about 26 days. So when I go to a real estate agent and I have my conversation with them, I say, look, from when I get referred to when they get their offer accepted has been running about 26 days. They're kind of like, whoa, that's really quick, because they're thinking I'm going to get paid faster, right?
Yep.
And so I want them to think that way. And it's like, well, how does it work? I don't want you to text intro me anymore, because the conversion is dramatically lower. If you do an email intro, it has a different feeling. A lender is finance. It's more professional to do an email. It's not as urgent. When I get a text from a phone number that I don't know, I'm like, who's this, right? I don't have their number saved. Who's this guy? And text, we feel more, it's more urgent to reply. I think it puts more pressure on a buyer. They don't have that pressure in email. So that's what's been working for me. I could be wrong, right? That's all my interpretation of what's happening, but it's working. And then it's not me telling a real estate agent, hey, I don't like how you do things. It's me saying this process works and I can support it with data. If you do this, you'll get in contract faster and you'll close faster and get paid faster.
So guys, I want you to get that takeaway. If you are a real estate agent, would you rather refer your business to a loan officer that talks about how fast they close loans, I'm available 24/7, that gives your client a fee worksheet, or would you want to work with a loan officer who's focused on lead to contract conversion, and he knows his numbers, and he actually knows that, hey, email intro is higher performing than text intro, and like, if you were a realtor, like a baller realtor, who would you work with? You'd work with Sean. So I just want to make sure everybody gets the takeaway. That's not only like, that's like a 10x metric. If you focus on that, it's not only going to help you with borrowers, it's going to help you convert agents. So anyways, that was huge, bro. Renee, anything you want to add on before Sean goes on a little more?
Yeah. Well, I mean, look at, when we talk about, everybody says know your numbers, but look at the numbers he knows. Like, he's measuring things that most people wouldn't even think twice of. I just measure referrals. Well, he's saying, well, is it a referral via email or text? Because there's a difference. And that's somebody searching for those little incremental advantages. That, now, here's what I think people don't realize. You go back to a real estate agent and say, hey, send me an email instead, and here's why. I'm measuring this, and he's showing that he's that meticulous, that he's that organized. That only creates comfort for the agent and creates massive differentiation to go, none of my other loan officers are doing that. And there's the question of price goes away, because he's going to get me paid faster. He knows his things. I trust the process. My brand is safe with Sean. And it comes in those little elements of knowing exactly where to measure. So here that it's measuring, but then the level of depth, peel back that onion, how many things he's measuring for the purpose, though. He hasn't lost sight of what's valuable to the real estate agent, because all of this should be part of the presentation. So I'm just digging every bit of this. I hope people are getting it.
And I do want to call out, like, we're only halfway through this, and we deliver on the promise of the call. Like, if you focused on that metric, you will get more borrowers, and you will recruit more realtors, and you will do that in a way that 10X's over time. So we still got a half hour ahead. So let's go a little more detailed on this story, and then let's get into, specifically how you're bringing strategy to consumers.
Yeah. One thing I wanted to add on that. So I don't want people to go, oh, I need to do email intros because those work better for Sean. Measure what works well for you. Like, just analyze your own business, because you might crush it with text intros and have the exact opposite experience as me. So don't just copy what someone else is doing. Analyze your own business, find your own metrics, and then build your business off of that.
Boom. All right, go a little deeper on strategy.
So what I found for me, once I get somebody into my initial consultation, it's a high likelihood that they will fill out the loan application. So I try to get people to do email introductions. My Calendly link is in my reply. 9 times out of 10, I get a Calendly pop up on my email. They don't reply to the email. They just set up the meeting, right? But it's very clear, this is what it is. And I try and make it empowering to the buyer. I want them to be in the driver's seat. I don't want them to have any pressure whatsoever. So the email effectively reads, thanks so much for the introduction. It's nice to meet you. I want to set up a meeting to make sure I can answer any questions you have before we jump into the application. Click here to view my calendar and pick a date that works well for you. We can do a call or a Zoom, whichever you prefer. If it is urgent, feel free to call me anytime. So there's no pressure, right? I wouldn't want to be pressured, so I don't apply any pressure. And I think that's why I get the conversion that I get. So they schedule their meeting, and then we'll jump on a Zoom. It's normally maybe 5 to 15 minutes. And a lot of my clients are first-time home buyers, but I just say, look, I know a lot of people have a lot of questions, and a lot of people don't know where to start. They don't even know what to ask, And I preface it that way because I want to remove any pressure. I want them to feel open to ask questions. So that's also why I don't dress up anymore. I want to be as approachable as possible. And for me, a suit, and this is just my personal opinion of myself, right? This is like a self-reflection. I feel intimidated by people in suits other than Renee and Barry, but everyone else, I get really intimidated by them, but I don't want to feel like a salesperson. So we do our Zoom, and I'm wearing what I'm wearing now, and I'm sitting where I'm sitting now. And I say, what questions do you guys have? And then we run through that and they answer those. And they say, I'm going to follow up this meeting with an email with the loan application, a short list of documents I need to review. As soon as we have that, we'll have your approval to you within 24 hours at the most. We'll have your approval letter for your agent, and we're going to build you a personalized website that we call a buyer's guide that we'll use as a funnel of information from start to finish to ensure that you know exactly what the money looks like before you make an offer. And that would be MortgageCoach.
Love that. And what you say in advance of delivering the presentation matters. As I have dissected the art and science of the mortgage advisors that have the best conversion, they all have something that's authentic to them, something that they say that positions them. They all ask some strategic questions. What would be just a couple of the strategic questions that you might ask so that you're delivering advice with your price?
I don't know that I have any. I mean, I really start off with, I let them drive, right? So, hey, nice to meet you both. Thanks for taking the time. Some people have a lot of questions. Some people don't know what to ask. So where did you want to start? And then I stop talking until they talk. And I just wait and see what they say. And a lot of times, like, man, we are the latter. We don't even know what to ask. And then I'll explain how a pre-approval works and why it's so important. I always cover, the number one apprehension people have to getting pre-approved is they don't want to run their credit. I explained to them how a mortgage inquiry is not like an auto loan or a credit card inquiry. It doesn't impact your scores negatively like those ones do, and how you can run it numerous times within a 30-day period with multiple lenders, because they don't want you to feel stuck with one lender. I'll say a lot of times you might find that I was great, and then all of a sudden you don't like me anymore, but I don't want you to feel stuck. Like, oh, Sean seemed great on that initial call, but now he's not calling me back. He's not texting me back. I wish I could go somewhere else. You can totally go somewhere else. So I'm just trying to break down any level of salesmanship. I try to do the opposite of what everyone else does because I don't want to be sold something. I would rather empower people to make really educated decisions.
Well, I think so. I'm going to challenge you on this because I'm positive. You are selling. You are actually professionally selling. You're not being a sleazeball, pushy abuser of manipulation tactics, which is what people say. We got to stop thinking sales is bad. You are doing the ultimate consummate sales professional, which is you are asking questions to say, what's of value to you? And then how do I deliver that value to you? Which is what our job is as salespeople. And you're the way, if you notice, he said, I don't really have one. I just asked. And then he went into a really beautiful question, which was, where are you? And you're not making any assumptions about them, which allows you to say, how far down the path of knowledge do they know? Where do I start with them? Versus assuming that they have all this knowledge and then starting with acronyms and words that may be above their head, or they may be in the beginning, so you can go back and sort of rebuild that value. I think you are absolutely selling, but you're selling in the way that it's meant and designed to be, which is bringing value to them in exchange of something else. And so I think your question, and I hope people go back and listen to it, that it was such a like an unconscious competence. Like you didn't realize how powerful that question was, but that's exactly where it should start. So I'm digging all this, but go back to that one question.
So I always start with, and again, most people I end up talking to are first-time buyers. So I say, look, some people have a lot of questions. Some people don't even know what to ask. Where are you in that spectrum? And then I let them answer.
Love it.
We don't, and again, I want to break down the barrier. I don't want to sound like an idiot and ask a stupid question. Good news, there's no such thing. And a lot of other people, I've had this conversation with lots of people, so you're not alone.
And if I go to you, well, I'm an investor, this is my 40th home this year, I just want to get this deal done, you'd have a very different conversation with that person than was the first time home buyer.
Absolutely.
And that question allows you, is what I think what I tell people is, it's like, imagine going up to the tee box on a golf course and grabbing your favorite club and then looking at where you're supposed to hit. It's backwards. You don't think about the question first. You think about, what does the audience look like? You look at the field. Where's the pin? What am I trying to do? What's my audience? Where are they at? What do they need? Then I go back to my toolbox of questions and techniques after I've assessed the playground. And so I think it's dead on.
All right. So I'm going to have you present, because, there's a couple things that the best of the best do. One, they position themselves in a way that's unique to a loan officer. They're not a loan officer, in a way that's unique to them. And they're positioning something more than closing your loan on time. Closing your loan on time at a competitive rate is a commodity. Helping people make smarter decisions and help them build wealth over time and coach and manage them over time, that's a value. So just get clear on your value prop, and then have you asked enough questions so that you can deliver a solution to someone's needs. So clearly Sean is doing that. So walk us through how you present solutions to the needs of consumers in today's market.
So, it really comes down to what that individual person's, what they need to see, right? I'm helping them overcome, I want them to become confident homeowners. That's really what I'm trying to create. So it could be, interest rates, it could be lender options. It could, there's a gamut of things. I can just share a couple of TCAs that I've used recently, if that's of benefit.
Yeah,
Want to jump there?
Yeah, let's start there.
So again, we're trying to create confidence. So, a big one is always, well, what if the property doesn't appraise? So I've modeled out, basically a sales price of 500,000, just a sample I made, putting 20% down. So the loan amount's 400,000. So what real estate agents often think is, oh, you're going to have to make up the difference. Sean, do they have the ability to make up the difference? They do, but they don't need to. What do you mean they don't need to? Well, it could appraise 15% low and they don't bring in a dime more money. Why? Because the opposite of down payment is loan to value, and the loan program allows a 95% loan to value, and they're at 80. Value is defined by the purchase price or the appraisal, whichever is lower. So all that would happen is their loan to value would increase and they would have mortgage insurance. So what I did here is modeled one out, just showing how that would work. So I have, if it appraises at the sales price, if it appraises 10% low, and if it appraises 15% low. And what we can see here is, if it appraised 10% low, I'd have a 90% loan to value. I have $46 a month in mortgage insurance. I assumed good credit, but don't beat me up over that amount. I just pulled it this morning. And then if it appraised 15% low at a 95% loan to value, they would have $70 a month in mortgage insurance. So buyer, good news. One, if there weren't comps for the property, your realtor would tell you that it's not going to appraise. It's not, the appraisers don't have some magical box they go to. We can all see the data. But if you are concerned about that, I want you to make a confident offer. Your monthly payment would increase by $23 if it's 10% low, and $70 if it appraised 15% low. Okay, cool. It's not I don't understand what's going to happen. Like, okay, cool. I know what my worst case scenarios are. And the odds of something appraising 10 or 15% low, I think is really slim, but I want to show them a dramatic approach so they can see how minimal the shift would be. And then is it worth the quote unquote risk for a potential $70 a month higher payment? That's up to them to decide.
So guys, write down speed to need. This is just a beautiful example of that. For my entire career in mortgage, speed to lead was the single most important thing to conversion. Going forward, speed to need, like speed to lead is just not enough. And you'll notice Sean's getting to the need. He's anticipating the need of a lower appraisal, and he is, he's being proactive. He's providing education. He's providing clarity. He's personalizing this. It's hyper local because he's a local market expert, and he's delivering a speed to need experience, that's awesome. Anyways, give us a reaction. What do you think about this first case that Sean shared? Did you guys love it? Give us a little feedback. So it looks like people are digging it, Sean.
Cool.
Can I point something out? Here's the thing that what I think people are realizing. These are behaviors that Sean engages in that not everybody else does. One is to slow down and to show a presentation versus just get a credit report, put it in process, and I'll let you know. And there's no visual representation of the relationship. There's no visual representation of shifts and changes in expectation management. He is taking the time. And people say, well, I don't have time. I said, no, you don't have time not to do this stuff. Every top producer has a presentation. And we all know the best presentation tool is what you have here with Trust Engine and MortgageCoach. But to be able to deliver it and to be able to sit there and look at that versus I get so frustrated and see under producers talking about, well, I don't have time to do a presentation. So, well, then you're not calculating time correctly, because the top producers somehow produce more, like exponentially more, and somehow have time for a presentation.
Well, and that's I love how this call was framed from like a data and analysis perspective of how many leads you need, because everyone says you just need more leads. Well, the reason you don't have time to give somebody a proper presentation that they deserve is because you're so focused on getting through all these leads that you got to move faster, and you have a very low conversion. I have a very high conversion because the people that are referred to me go through this process. And I had a realtor meeting, to Renee's point, last week. I was walking him through my process with, and he's like, how do you have time to do this for everybody? And I was like, well, how do I have time not to? I mean, you're sitting with me because I do all of this. So it's counterintuitive. You think you don't have time to do these things. I think that's why you're not where you want to be.
So share another story and strategy. And anyone listening to this, guys, this is the code. This is the conversion code in the market right now. Positioning yourself uniquely, truly understanding the borrower's goals, understanding needs, and then delivering a masterful presentation that addresses those needs. By the way, I did put a link to that one for everyone in chat. If you're watching this on YouTube, there'll be a link to these. Sean shared them in advance, and I'll share this one right now as well. Go ahead, Sean.
So this one is just showing somebody, again, I want to create confident buyers, right? Confident buyers make confident offers get accepted. So when we're in a competitive situation, we know there's going to be multiple offers. I want them to look at how they offer properly. It's very easy if a real estate agent said, hey, you're going to have to offer an extra $25,000 on this house. It's very easy emotionally to say no to that. I'm not paying an extra 25 grand for this place. I think a better question is not what does the house cost, but what will the house cost you? And that's why I build this mortgage coach this way. So I showed, $700,000 price going up in $25,000 increments. So if you pay an extra $25,000, your monthly payment will be $177 more per month. And your cash out of pocket's an extra $2,500, I think. Is that right? Yeah, an extra $2,500, right? So I did 10% down. So is the house worth losing over $25,000? Absolutely. Is the house worth losing over $177 a month and an additional $2,500 out of pocket? No, that's just one dinner out. That totally makes sense. Cool. So we're looking at this the right way now. Now, is it worth losing if you went up 50,000 over 355? Yeah. Okay, great. So we're figuring out what your comfort zone is with your offer. And, you know, if it's not worth losing, I would say aim a little higher, knowing that the monthly payment will change and the 10 other people we beat out are going to go fight for the next house, which is going to be very similar to the one you're buying, and they're going to drive your value higher. So we have these detailed conversations. Now that I'm thinking about what Renee was saying, this is a whole nother thing I do with every client as they make their offer process. Like they find the right house, we go through this together, and it's probably another 10 to 15 minute call. But if I get their offer accepted faster, it's time saving. I'm saving more time by taking more time.
Absolutely. You're 100% doing it. And you're giving all the things that we all talk about a great experience for them, which will generate even more referrals. I mean, this is the way a true professional does the work. And, you know, looking at this too, the important contextual piece here is that I think people need to separate out two different pieces, which you're kind of doing here, which is the time to buy a home versus the time to finance a home. You know, because the financing a home, yeah, they're only comparing the financing judgment based on what it was over the last 2 years versus what is it like over time. But you also have to look at that in comparison to what's happened to house values and what's the purpose of the home. It's much more than financial. People are going to freak out over finances during the process. They're going to forget the finances when they're in the home. They have the home of their dreams and they have the closet they want. They're able to entertain their friends. Those are rounding errors. At the end of the day, like literally we're dealing in rounding errors, and your job is to help them see that in context of the emotional side of buying a home, the value side, the family, the memories, the things that are truly priceless, and then look at what is it a good time to buy and be in real estate, which we know that that's a good time to buy. Well, financing is a short-term piece. If maybe it's a little higher than it was before, cool, get in now and we'll fix it later. And helping people really distinguish all three of those pieces, which is what your visual does.
All right, guys. So let's do one more, and then we'll just focus on taking action. Also, Todd Bookspan and I are in the process of scheduling a special 2-day site visit. One day with Sean Herrero, Sean here, and the next day with Jeremy Forcier. So if you do want to learn more about that, just email me at Dave@TrustEngine. I'll loop in Todd, and you know, we're putting that together. Again, Dave@TrustEngine if you want to be part of the 2-day site visit with Jeremy and Sean. All right, so go ahead, Sean, show us another strategy, and then let's just focus on, guys, how Renee and I are going to close on how can you be like Sean? Like, how can you kill it on social, you know, be your authentic self, and then how can you take that one-to-many into a one-to-one? So Renee and I will share some things that we think would help everybody accomplish that.
And don't want you to be like me. I want you to be like you. So I love just be authentic.
Yeah, boom. Roger that, brother.
All right. So this
one's going to be your best authentic self.
Yep.
Like Sean is.
That's the goal. So what I'm going to show you next is one that will put everyone on this call out of their comfort zone. Most people say I'm crazy for doing this, but I'm going to tell the story because it's a really fun story for me. So I had a client reach out to me. She's like, hey, I have a friend, they're buying a house, they're working with a family friend, and it doesn't seem like they're getting proper explanation. You know, I really want them to call you. I gave them your number. I said, okay, I'll let you know. She goes, did they reach out? No, not yet. Do you want me to text them? She sent me their information. I texted, to my point earlier, they didn't respond. Well, long story short, that buyer ended up getting referred to me by 3 friends, all of which who didn't know each other. So 3 separate people said, you need to call this guy, Sean. So he calls me. And he was 2 weeks into his escrow. And he's like, look, we have one lender that we were referred to that, you know, is down in Los Angeles and we can't really figure out what's going on. And then we have another one up here that we've been talking to. Can you help us? I said, absolutely. Send me the quotes, the loan estimates they've given you, and I'll build out a side-by-side comparison of them and me so you can make the most educated decision possible. So they sent me the quotes, and this is the comparison I built out. So the first lender was their purchase price is $815. The loan amount $733. And he told me this over the phone. And as soon as I saw that, I was like, I already know how to solve this problem. But the rate they quoted was 7.875. Lender B was 7.75. And then I ended up being at 7.5. But what I did is they were paying, let's see, where's my discount points? So they were paying with lender A, they were getting rate of 7.875 with discount points of 5,500, which seemed high to me, right? That didn't make sense. So what I said is, well, wait, you're paying the lender $5,500 for that interest rate. Instead of doing that, just put an extra $6,000 down. That'll put you into a loan amount of 726. You'll get the lower rate and you'll have $6,000 more equity. I'm just taking that money from the lender's pocket and putting it into the equity of your home instead. And I was like, by the way, either of these other lenders could do the exact same thing. And he's like, well, why didn't they show that to me? And I go, because they're order takers. You told them you wanted to put 10% down on a home price of $815. So they showed you what you said you wanted and they moved on. As soon as you told me your loan amount was 733, I was like, we're just going to put an extra $6,000 down and save you money and get you a lower payment. So as a result of this, I ended up saving them $240 over lender A and what is that, $160 over lender B. I built trust, right? And I'm not, again, I guess I am selling, but I'm not selling in my mind. I'm just showing somebody how mortgages work. And I'm calling my industry out on its nonsense. And I'm showing people that they deserve better from a lender. And he's like, well, what do we do now? We're so deep into this. I was like, I can get your deal closed in 10 days, no problem. Send it in. We were clear to close in 3 days. He closed yesterday, actually. And he's a knife smith on Instagram. And I got a knife for a friend of mine that's a SEAL, and he put the SEAL logo on it. Like, we built like a friendship off of this deal. Nobody uses MortgageCoach to compare themselves to their competition because you're scared you're going to lose. And I've done this and I have lost. But what does the person say to their friends? People are going to tell a story about their home buying experience, good or bad. They're going to talk about it. Even if I don't help them, if I gave them confidence in the lender they ended up choosing, they're going to tell people, this guy, Sean, modeled out 3 things. For us, he wasn't the best, but we were blown away he was even willing to do that. And again, every people go, well, that's such a waste of time. What if you lose? What if I win?
So guys, I'm just going to tie this lesson. I actually interviewed Keith Collins on Friday. It was like how Keith Collins is optimizing conversion. Be another great lesson. So you'll see how right now you're hearing how Sean does it. You'll hear how Keith does it. But guys, anyone that's optimizing conversion, this is not how they're doing it. They're not delivering a transactional experience. They're delivering a transformational experience. They're showing options. They're speed to need, getting to the market. And if you do that, guys, when you do get into that rate shopping situation, you step into it. You say, hey, this is what I have. And here's an example where the other lender actually had a 0.5% better interest rate. But then you know what you do, guys? You show what's that cost over 12 months? What's that cost over 2 years? And if you've done a good job of showing up for that consumer, of giving them advice, knowing that, hey, rates are going to come down and you're going to get refinanced out of this thing within a year anyways, it's only a $2,000 difference. First of all, what I'm hearing in the marketplace, if it's only a $2,000 difference, you're not doing a price concession. You're not losing the loan. And if it does, let's say it's $3,000 a year, maybe you're providing a $500 or a $1,000 lender credit. You're giving a concession with dollars, not rates. Because when you negotiate with rates, that's expensive. That's Optimal Blue says the average price concession right now is 80 basis points. That's expensive. So just make sure you're using this ninja move and a little, you probably got the script from Jeremy, but when they come up with a better rate, go, oh, would you forward me that, total cost analysis with the video that they did for you? Oh, they didn't do that for you? They didn't show you the transparency over time? They didn't give you strategies? Okay, well, give me the fee worksheet and I'll help you make a confident, informed decision whether you pick me or not. Guys, that is how you win in this market. So Renee, I want to transition to making this actionable. Sean, you will get the closing thought. So be thinking of how do you want to close out. But I know for me personally, the content I create, the YouTube channel we have, it's incredibly valuable. But what's more valuable, guys? It's being in person. It's masterminding in a physical place together, in a curated experience by a master coach and a master teacher. And we have a very important event coming up that I want Renee to talk about. but it's Amplify. The live event of Amplify is coming soon. It's going to
AmpCon.
be a room. Say that again.
AmpCon.
Yeah, AmpCon is the name. Amplify is the book. I've been through, is it the actual workshops you do? You call those Amplify, right?
Amplify is the workshop. Yep.
Okay, the workshop. I've been through those workshops 3 times, but we have an important event coming up that I want Renee to describe, because I do believe this is not just another year in the mortgage space. I want to network with a lot of the most elite mortgage professionals and mortgage coaches. So Renee, tell us when it is, tell us a little bit about it. And then Sean, we'll get some closing thoughts before we wrap.
Yeah. Well, one, thank you. It's October 26th is AmpCon. It's our annual event. So this is where we have 500-600 people coming together that are committed to their growth and their learning. We've got a group of speakers that my goal is that you're going to say, I heard it here first. People that you may or may not have heard of, or maybe you thought are on the up and coming, and you see them and they blow your mind. We've got Jefferson.
Show your screen. When I interviewed you a couple Saturdays ago, you walked me through your screen, and I was like I was wowed.
Yeah, well, we've got I'll just show you some of the speakers that are coming up here. Right now we've got Jefferson Fisher, who in 200, just to give you an idea of this guy, Ed Milet has 2,000 posts and about 2.6 million followers. Jefferson Fisher has 255 posts with 2.7 million followers. He is absolutely destroying it and on a skyrocket to the moon for his social media. But he's a trial attorney that teaches you how to better communicate, which is great. Clinton Sparks is a 75 million
quick,
record
before
sold.
you go off that guy, everyone follow him. We'll put a link in chat. It's like social media that teaches you things. By the way, if you follow Sean Herrero, he's a mortgage professional that teaches you things. You get ideas. So make sure you guys follow Jefferson. We'll put a link in chat. It's one of my absolute personal favorite Instagrams to follow.
Yeah, he's incredible. And then you've got Clinton Sparks, who's got 75 million records sold and worked with, you name the artist in hip hop, but he's also going to be the face of Entrepreneur Magazine because he transcends business and culture and music, but entrepreneur at heart, just an incredible person. Neil Ford, which I think is one of the most decorated ad executives in the entire world. I'll just show you briefly what I think you can see this right here. Here's Neil Ford. He's going to be there speaking. We've got, again, Jefferson Fisher here, who's got, like I said, 2.7 million followers. Every single one of his posts goes viral. I've never seen anything like it. 1 million, 10 million. It's just incredible. And let's see, I think we got Clinton Sparks should be right up here somewhere. Hunter Cloudis is going to be there. If you watch All American, he's one of he plays JJ Parker on All American. He's going to be there, but he's also just an incredible human being. I'll show you Clinton Sparks.
Yeah, your screen is blank.
Oh, it's blank. It's not showing.
Nope.
Okay. Well,
guys, we're putting a link in chat for this. How much is it, Renee? And remind us all of the date.
So we've got October 26th is the date, and it's I think our early bird is $500, but I think we have a 25% off because of MortgageCoach. Everything. Use the code Renee25. Or did we give
25? Use that code, guys.
Yep. And so do that. You're going to see, and also just some of the best loan officers. People are going to be there. It's phenomenal. Oh, Aaron Williamson, who's the personal trainer, the celebrity trainer for The Rock, Zac Efron, Sylvester Stallone, a bunch of other people. So, yep. So it's $500. I think it is right now as early bird, and then 25% off that. So you're like at $350 or something like that. It's a no brainer.
So guys, and to me, the stage is going to be amazing, and the community of professionals. If you're signed up or you're going, let us know. I hope to see a lot of you there. And again, you want to 10x yourself. This is a 10x event to go to. So Sean, let's close out with any closing thoughts you have. We've got I
have to get to my other meeting. I'm gonna have to get Sean. I just want to tell Sean, guys, listen to what Sean is, what he's doing, what he's saying. His results speak for themselves. But don't get confused by the ease by which he makes it sound. This guy works hard at the details. That means that everything that you got looking forward ahead of you is going to take work. It's going to take time and energy to learn how to use the technology that he's using, but it's worth it. 9 million a month versus other people are starving. There is a difference. It's worth it. It's worth the hard work. Sean, always a pleasure. Dave, love you guys and love this community.
Thank you, Renee. I appreciate you helping moderate this with me.
Absolutely. Thank you, guys.
All right. So Sean, close us out, brother.
All I've been thinking about since June of this year is I don't want anyone using the market as an excuse for why you're not where you want to be anymore. If you do 1 loan a month and you do 2 loans a month, you doubled your market share. So it doesn't matter if you do 10 deals, just think smaller and just know that it's right in front of you. Transactions are happening and you just have to make sure you're a part of them. And the way you do that is by adding more value than anybody else. So that's really what I want for people. Just don't create excuses for why this year hasn't been what you want it to be. It hasn't been what I want it to be, but it doesn't mean I'm done. I've got 3.5 months left. So I just want people to drive harder and have more faith in themselves and not make excuses for why they're not where they want to be.
Love it. So guys, I'm going to close out. I want to make this tactical, make this your hub all year long. If you're a manager on this, I really made this as a base camp for managers to turn loan officers into mortgage coaches in this market. It will make you a more profitable branch. It'll help your loan officers be more successful. Sean will be right here within a couple days. I want to remind you, not only do we have this playlist, but we have this speed to need sales training playbook. So where I've had our e-learning person here at Trust Engine put together like all the best TCAs, all the best training to help you guys learn faster to become mortgage advisors. And then also below this, for anyone that's new to Mortgage Coach, by the way, if you're not a mortgage coach, you can sign up right here. But if you don't know how to use it, there's training. We've got beginners training, how to get started. Within a day or two, you can do the intermediate training. And then you can sign up for live training. We have beginners training every Monday. I'm doing a sales meeting like today, every Tuesday. Every Wednesday, we're just training on strategies. Every Thursday, it's Q&A. You can come and show up with any question you have. And then every Friday, we're masterminding, So Sean, appreciate you, brother. Anything else you want to make sure we close out before we say goodbye to everyone?
No, I think this has been great. It was a lot of fun, and just analyze what you're doing. 80-20 everything are your efforts getting you to where you want to be? If they're not, stop doing them.
All right, give us a little reaction as you leave. Did you get value from today? Thank everybody for your time. Have a great day, everybody, and take care, Sean. Appreciate you.
All right, thank you, brother. Appreciate you.